Hey traders, in today's video, we're going to be looking at a structured trading opportunity with an amazing risk reward to it, and also talk a little bit about the power of confidence and the effect that it can have on your success as a trader. All that and more in today's Forex market preview video. Hello traders, and welcome back to another edition of the Forex Market Preview. I missed you guys last week. Fortunately, Jason Greystone was able to step in and give you guys a fantastic video. So it's good to see that no matter what trading coach is able to step in, we can keep the ball rolling and continue to give you guys excellent trading content. If you guys are brand new to the channel, my name is Akil Stokes. I am a professional Forex trader, as well as the head Forex trading coach over at TradingPower.com. And well, after you're done watching this video in full, spend some time on our channel. We have hundreds and hundreds and hundreds of free trading videos for you to check out. Some very old and embarrassing, but feel free to venture around. And I'll tell you what, if you like what you see, make sure you hit that subscribe button. That way you don't miss the next trading video, whether it's from myself, Jason Stapleton, Charles Miles, or Jason Greystone. Now, in today's video, we're going to take a look at a structure trade on the Euro Yen, a trade that has a fantastic, potentially fantastic risk reward on it. And then we're also going to talk a little bit about the power of confidence and the effect that it can have on your trading. I had a great conversation with a trading peer of mine about how the markets have been this year and how a lot of traders out there are losing their confidence and really starting to fall off the deep end. So we're going to talk a little bit about that. So make sure you enjoy this video all the way to the end. Make sure you share this with a trading friend of yours if you find the content to be worthy, and we'll hop right into the charts and hopefully give you an opportunity that you can take advantage of on the Sunday Open. All right, so we're here on the Euro Yen. I want to get started looking at the daily chart just to give you some higher time frame perspective of what's going on here. And you can see the most recent move in this market was a move from a swing low to a swing high. So the market made a pretty big move from down here at about 112.75s all the way up to about 124 even. And then we started to consolidate. And you can see that price action started to run out of steam. The market went into consolidation, which is what we call this sideways movement for quite a while. And then we eventually broke out to the downside, right? Now, at this point, here's how I look at the market, right? There are two things that we could be doing here. This can simply be an outside return in a bigger overall move, all right? If I go ahead and look left, you'll see structure leaves clues. If I take an arrow right down to where we came at, look left, boom, we retraced right to the top of a previous kind of consolidation pattern. This is going to be a little wedge pattern here with this mark being the high of the wedge. So this can either be, right, just a bigger, higher time frame pullback in what could potentially be a continuation up, right? Maybe a one-to-one measured move or an ABCD pattern up, or this could just be the start of a downtrend that comes back to retest our previous level of consolidation. The key is we don't know. And every time we say that, we get a lot of newer traders that are saying, hey, well, that sounds unprofessional. How can you not know what the market is doing? And guess what? We never know what the market is doing, right? If we knew exactly what the market was doing, we would be right all the time. Our job as traders isn't to know for sure what the market is doing, because one of the biggest mistakes you can make is thinking you know more than the markets. Our job is to do our analysis and try to make the correct predictions and put ourselves in the best situations to, I don't want to say maximize our reward, but the best situations to potentially make profit while only having limited risk. And that's exactly what this situation is going to be right here. If we go back to the consolidation that price action did up here, right? We consolidated and then we broke to the downside and we started what is a bearish trend, right? You can see swing high to swing low, outside return. We have a lower low, lower close. We have another outside return. And outside return is just another word I use for pullback retracement. So if that terminology seems weird, just think about it as a pullback or retracement. And then we follow that up with another new structure low. So for you guys that are familiar with trend, this is obviously a bearish trend. For you guys that may be new to reading a price chart, right? When we have a series of lower lows, 1, 2, 3, and a series of lower highs, 1, 2, 3, we call this a bearish trend, right? So right now, when I'm looking at this chart and I'm going through my IPDE process, that's identify, predict, decide, execute, I can identify that we are in a bearish trend. So if I'm asking myself, if we are in a bearish trend, then what is likely to happen next? And well, that would be a continuation bearish. So that would be either a pullback or a continuation, down to our previous structure low, and maybe even a potential move lower. Now, again, do I know that this is going to happen 100%? No, I don't. If I did, I would bet everything. I would liquidate all other accounts. I'd sell all my real estate. I'd get another mortgage on the house. I'd slide the kid into the middle of the table and put it all on short. But we don't. And that's why we want to be cautious with how we attack these situations. Is my analysis telling me that we're more likely to go bearish than bullish? Yes, but we don't know for sure. And what makes this situation good is that if we just look at our risk reward, and I'll go down to a lower time frame to the 4-hour chart, just to give you a little bit better perspective, right? If we just look at our risk reward on this pair, and we say, hey, I want to enter, let's draw these, draw our trend back in here. You can see a little consolidation here. Market goes sideways a little bit, right? A little triple top action there. Notice, look left, structure leaves clues, right? I'll draw that in later, right? And then we continue that with a move lower, right? Now, price action has come right back up to a previous level of resistance. And something I like to do on my charts is I like to draw out just a straight line. So I take my horizontal line tool, I'll draw it right at our resistance level, and I'll say, well, is there anything interesting at this resistance level? Is this a level where the market has shown me that it has importance in the past? And if we take a look at this, look at what has happened at this level. And this is all adding on to the analysis, right? Not only do we have the market consolidating right at this level here, resistance, 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 right? But before that, that same level was previous support, 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 right? So we have a level here where price action, you can even look at this consolidation in here as well. We have a level right here where price action traded above it, came back down, it held as support, right? Traded above it, came back down. We had a little bit of a breakthrough, but held as support as we traded above it once again. We then come back down, we test it, support holds. We test it again, support holds. We test it again, support holds, before finally breaking down to the low side, lower low, lower close, breaking out of that consolidation pattern on the higher time frame. Now, once support is broken, what does it then turn to? Or what would we expect it to turn to? Right? Resistance. So you can see after price action trades below it, previous structure support turns into resistance. Resistance holds, we get rejected. Resistance holds, we get rejected. Resistance holds, we get rejected. And then we have a continuation to the downside. Now price action has moved its way right back up to that same level, and we have I guess we have a decision to make. I like calling these decision points, right? Because at this point in the market, price is going to tell me what is likely to happen if we hold, right? So if we fail to break this previous structure of resistance, we're likely to continue in that downward trend. If we break above and close above and we violate that level, then we may have a continuation to the upside. I'll show you an example of a great trade we had on that over the last few weeks. So if price action gives me a signal that we're going to hold this level, right, then I want to be short. And here's the cool part, right? Because we're so far up into this resistance level, let's say I put on a short opportunity, right? Where do stops need to be? And I'll do a poll question in the top right of your screen if you're watching here on YouTube. Answer the question, where do stops need to be? Right? Right above our previous level of resistance. So you can have a very, very, very minimal stop loss. And if we're anticipating a continuation in the trend, guess what? we can look for a move all the way back down to previous structure lows. Some of you may be even looking for an extension even further. I'm not that risky, but we can look for a move back to previous structure lows. And look at this. We're getting essentially a 6-to-1 risk reward. That means our potential reward is 6 times what we're risking in order to get it. That is a good situation that you want to put yourself in. Now, for some of you guys, you may be looking at this chart and it's a big move, Akil. That's a big move. I don't know if I want to ride that bad boy all the way down there. Well, guess what? Let's say you're a little bit more cautious. You want to take targets right in here, right? This could be a potential head and shoulders pattern, right? I'm in your brain. I know what you guys are thinking, right? This could be a potential head and shoulders pattern where price action puts in a shoulder down here and then stops you out. Well, guess what? You're still getting almost a 4-to-1 risk reward. Well, Akil, what about our previous, right? If we want to take a look at the minor ebbs and flows of price action, we have our previous outside return right here. Again, look left, structure leaves clues, right? Price action hits this level as well, right here. We find support right here, right here. What if you don't feel comfortable taking a trade past that level? Well, guess what? Moving on up. Still almost a 2-to-1 risk reward. So no matter how you look at this trade, no matter how aggressive, right, or conservative your target taking is, and that's going to be a personal choice up to you as a trader, and that's going to vary depending on your trading philosophy, you're still getting a pretty decent risk reward, and you're in tune with the underlying trend of the market. So this was a pretty decent trading opportunity. This is a pretty decent trading opportunity that we can look for on either the Sunday open or on Monday, whatever your first trading is. And it reminds me of a situation that we had on the Aussie-Canada pair. And I say that because, again, this is a decision point. This is assuming this level does hold, right? If price action breaks above and closes above, then we have a different situation. And here's how we handled it. Now, going over to Aussie dollar, Aussie-Canada, right? Here's a trade that we took this past week or 2 weeks ago. And it actually sets up a long time ago. So if you've been a frequent of the Forex market preview here, meaning you've watched this every single week and watched every single episode, as I expect that you did, right? Right? Good, right? Then you remember this trade. We had a very nice structure-based trade right here. Right, we looked left as always, structure left clues, and we had a very nice short riding this down a couple hundred pips before retracing back up. Now, as price action retraced back up to this level, we had the same type of decision point. We had that if-then thought process come up in our heads where we said, hey, Akil, if price action holds at this level, then look for shorting opportunity. If price action violates our previous level of structure, right, then look for a long opportunity. And you can see that price action came up to this level. Eventually, we broke out, so we broke through that level of resistance. And our thought process shifted from looking for selling opportunities to looking for buying opportunities, right? So we weren't caught up in one way thinking in the market. We're not relying on how we feel. We're not relying on, I talked about it in this week's trading blog video about confirmation bias, not relying on what the internet is telling us or Bloomberg or CNBC or CNN is telling us. We're relying off what we see on a price chart. And what happened here is we go down to the hourly time frame, you'll see that after we had that higher high, higher close, right above here, instead of looking for a short position, we were looking for an opportunity to get long. And we found that opportunity to get long in the form of an advanced pattern formation. We had a move like this. Click on my tool here. We had a move like this, swing low to swing high, X to A to B, B to C, C to D right down here. It was an interesting move because we got filled right during, I think it was I'm not sure if it was some announcement from Canada. My mind can barely remember what happened yesterday, so I don't remember what it was, but we had a news announcement on Canada, and the market was just, we saw Canadian strength, and it was one of those falling knives, right? The falling knives that the internet trolls and the trading firm people tell you never to buy. Well, guess what? We bought it. We bought that falling knife, right? Why? Because it completed an advanced pattern formation that met all of the rules of engagement, and we were supposed to be in the trade. And that falling knife that we were supposed to avoid, guess what that falling knife did? That falling knife rallied up about 200 pips all the way up here. Right, so I got first targets off for about 90 pips. Was shooting for $1.03 even for my secondary targets, which is a little bit higher. And you can see that I did not achieve that level, and I actually got stopped out on the remainder, the second half of my position, right down here. So I made first target profits, and then I got stopped out for trail stops for like another 120 pips. Right. Not bad for being stopped out, right? And a lot of you guys get stopped out and blow accounts. We get stopped out and we gain 120 pips off of it. But that wasn't it. We then re-entered this this pair last week, right? Off of another advanced pattern formation, right? Cipher formation this time, X to A to B, B to C, and then a CD completion right here. Again, buying into 1, 2, 3, 4, 5, 6 bearish days, 6 out of 7 bearish days, or bearish candles. And then we just got target hits, target ones hit on Friday, and we're back in this trade again, looking for, at least I'm looking for extended targets back up to that 103 even handle. So a good example of shifting that thought process on the euro yen trade, we're looking to get short. However, let's say we take that trade, let's say we get stopped out. It's not one of those deals where we run away and we go cry in the corner. We reload, you take 5 minutes to kind of relax and settle yourself, and then we look for the next trading opportunity. Because often, right, when previous levels of resistance are broken, they then turn to support and they offer new trading opportunities. And if you're sitting on the bench because you're scared, right, you're not going to be able to take advantage of those trading opportunities. And it's difficult for a lot of traders, and what it takes is confidence, guys. You know, I've worked with a lot of traders over my years, and we just launched our new trading course about a month ago. And we're dealing with a lot of new traders, and the main thing that I notice is lack of confidence. These traders are going through the course material. They know what they're doing. They're reading things the right way, but they don't have that confidence yet in reading a price chart. And when you lack that confidence, it's easy to find everything in the past, right? It's easy to look back through historical data and say, oh yeah, this was that, this was that. But when it comes time to execute the trade in real life, they freeze up, right? Have you guys ever done that? Have you ever seen everything and analyzed everything correctly only to freeze up when the opportunity arises? Yeah, that's called the lack of confidence. So you need to have confidence in your ability to read a price chart, right? And that confidence is the same thing that you need if you want to be a consistently profitable trader over time. I spoke to a trading peer of mine, good buddy of mine, Mark Sedlock, who works over in the future side here at Trade Empowered. And he trades oil, right? He's an amazing trader, incredible returns. However, you know, we're talking about oil. And if you look at oil, let's just go to the daily. Oil hasn't moved, right? Oil hasn't moved since December, right? Now, Mark, he trades a momentum trading strategy, a trend trading strategy. So guess what he needs to do to make money? He needs the market to move, right? And with oil going sideways, it's been very frustrating. Now, for us as traders, we've both been doing this for a long time, so we know how to deal with frustrations. It stinks. We don't like it. Sometimes we want to get upset and punch the wall, kick the cat. But guess what? We know it's a natural part of trading. We've seen it before. We've traded out of it. Things have gone great. So we know that we can do it again. However, for a newer trader that doesn't have that experience, for a newer trader that hasn't been in the markets that long, this can be a devastating time, right? This could be a time where you lose all confidence in what you're doing, and then you start to either bail on your system or you make mistakes. And most of you, I guess you've probably done this before, most of you have traded a system, it's worked well for a little bit, and then guess what? You enter a patch where it doesn't go as good, and you bail on it, right? And then what happens? What always happens? As soon as you bail on it, right? You go to this other system, and that new system, right? That works good for 2 weeks, and then guess what? That one stops working as well. And then you look back at your old system, you're like, oh man, the old system just started working well as soon as I bailed on it, right? You have to have confidence in yourself, right? We had a very rough year to our syndicate. To start things up, I'll bring a chart over for you. We had a very rough year in our syndicate. You can see we've been trading about 10 weeks so far this year. And just look at the beginning of it, right? Look at the beginning of our curve. It is a straight nosedive. If you have children watching, cover their eyes. This is nasty, right? Cover your eyes. It was a straight nosedive, right? And then over the last 4 weeks, right, we've bottomed off here a little bit, and we've started making our way up, started reestablishing that bullish trend, right? Now, this halfway point, right, that number 6, that's where most traders will stop. They'll get through the first 6 weeks of the year and they'll be like, you know what, the first 6 weeks weren't good, right? Keep in mind there are 52 weeks in the year. The first 6 weeks of the year weren't good, so guess what? I'm gonna quit on my strategy. And they quit right there. And they never have the chance to see that return. Where experienced traders who have been through this before, right, we have the luxury of experience. And you can see in the bigger picture here, right, those 6 weeks in the bigger scheme of things, not really a big deal at all. You can see the equity curve. You can see there's pullback after pullback after pullback. And what happens after each pullback? There's an extension higher. And as long as you're doing that, guess what? You're going to be on the right path as a trader. Now, the question is, how do I go about doing that, right? If I'm new, how do I gain experience, right? How do I gain that confidence? And a great starting point is going to be our website, guys. Go over to tradingpower.com. There are tons of content, tons of educational content over on this site. If you click the Learn to Trade tab, there's tons of free training over here. I recommend Into the Gray. But guess what? If you're looking for more support, just not a free training, check out our training courses and coaching programs. We have everything from your most basic course, the complete basics course of Forex for those of you that are very, very new, all the way to our ultimate trader transformation course where you get coached by 4 traders. Myself, Jason Stapleton. Yes, that's right. I said Jason Stapleton. He is doing the training in this course. Jason Greystone and Charles Miles. And for those of you that maybe don't need a course, you're saying, you know what, I don't need a course. I just lack confidence. I need to build that confidence and really trust myself, right? I recommend spending some time in either the live rooms or the syndicate program. There's nothing more beneficial than trading with a community. And one of the biggest things I get, especially from our syndicate members, is when they see a video that I post out, they'll say, Akil, I just want to say that I was looking at that pair earlier. I was looking at that same type of formation, that same setup on there. I wasn't sure about taking it, but as soon as I saw your video and knew that you were looking at the same thing, that gave me the confidence to go in with the trade. And I'll tell you what, sometimes that's all you need. Now, hopefully you don't need that for life. If you need to rely on someone else to give you confidence for the rest of your trading career, probably not a good thing. But the plan is you stay in the live room, you stay in the syndicate until you start to build that confidence, and then you spread your wings and go trade on your own. All right? We have many people that want to stay just because they like the community. It keeps them accountable. But the goal wasn't to have you in these programs forever. It's to get in there, right? Accomplish what you need to accomplish, whether it's confidence, whether it's kind of getting a look at the reality of trading, and then go off, right? Go off on your own trading journey. So thank you once again for joining us for another Forex market preview video. If you liked what you saw here, show us, hit that like button, leave a comment, and of course, share this with a few trader friends of yours. And if you continue to do so, no doubt that we'll reach our goal of 100,000 subscribers. And that's just gonna get us more fired up to bring you this free educational trading video each and every week. So until then, plan your trade your plan. Have a great one, traders. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradingpower.com website, or also take a look and you'll see more videos available for you. Have a good one.